Hi, everyone. This is Dan Bird with the Daily Scan on December 31st. Happy New Year. Hope you have a great time tonight. Everyone be safe. Last day of the year, the market is closed and it closed down once again. So it looks like lots of end of year tax loss selling is taking place. We're going to see if that list that I posted on the website for tax loss selling, we'll see how good that was. We'll look at it in a couple of weeks. It's not something that should happen right away, but it might take a couple of weeks, but we'll see. We'll see what happens. And then I'll show everybody what the list looks like once we do that. I also put out some dividend stocks today. I did the first one. I'm going to do two of them. First one is, it includes the dividend aristocrats. Dividend aristocrats are companies that have paid and increased their dividend every year for the last 25 years. And if they miss, then they are taken off the list and they can't rejoin it for another 25 years. So these are all really good dividend paying stocks. And then I ran some scans against that list to identify the strongest ones, potentially the strongest ones with the highest yields, and whittled that down to about 30 stocks. And then I further filtered that to show you the strongest ones of that 30. So there's some potential opportunities there. It's I'm not making a recommendation on buying or selling, but those are meant for long-term holds over a year. So you can take advantage of the 12-month or long-term capital gains and hopefully get paid dividends as well on top of that. So I'll cover that some more on Thursday and actually show you the results of last year's dividend scan, just to give you a sense for what's possible there. And those are available today. I just put that out there for the aristocrats, dividend aristocrats. So anyone that's a subscriber can go out and look at that list. Just a quick disclaimer, I'm not a financial advisor. This is for educational purposes only. You need to understand your own risk profile, make your own trading decisions. Past performance does not guarantee future results. And if you do want to engage with a financial advisor, you could go to this site here to check them out. So let's take a look at the market. Not a great day today. The market timing bias finally just really rolled over significantly today. You can see that's just going straight down now. I'll show you why in a minute. Yesterday it went sideways, mostly because gas and oil went up. So they gave positive, even though there were some negative ones. They kind of canceled each other out yesterday. Today we didn't have that, and it was just selling today. So if I actually look at the market bias matrix right here, you can see all the red over here. And most of these are up here with the indexes, S&P and the NASDAQ. So they've now given short-term red signals. Medium-term would come next. Also look at the sectors, two red ones there, two red ones in the industry groups, two red ones down here, both short-term and medium-term for lumber. And then Bitcoin gave a medium-term bear signal as well on Bitcoin. We'll look at all of these in a second. Actually, let's just look at it right from here because these give you a pretty good view. So you can see the chart that's on the main page right there. And more importantly, you can see where the short term crossed over the medium term and the long term way back here in early December. So giving us the first warning that this was coming. So this should not be a surprise to anybody. This has been percolating for quite a while. Let's look at Bitcoin. I'm sure everybody's interested in what that looks like. So I mentioned yesterday that potentially a head and shoulder setting up, that it is not a valid pattern until it breaks through the support, the neckline down here, and it went right down to it today and then bounced and went right back up to the 50 and the 21, which are now, this is why it gave a medium-term down signal, because the 21 is just slightly below the 50. So, but then it traded all the way back down again, unfortunately. We can look at that on a 10-minute chart. So here's yesterday's that I mentioned went up, came all the way back down. Today started off sideways, had a nice run in the middle of the day, and then again, pull all the way back again, right at the end of the day. And sitting right there, not at the lows necessarily, but at the low of this particular trend. So This could continue next week. It's well, it'll be interesting to see what happens Thursday and Friday, because today I think was a lot of tax loss selling, people taking profits at the end of the year. I think that's what a lot of this was. We'll see if that's the case Thursday and Friday. If we go up and look at the S&P, actually, let's look at the NASDAQ 100 right here. And you can see there's a short-term down signal sitting right on the 50-day long red candle, which means it closed at the low. So this could continue next week, but it's sitting right on basically a support area. So if it's going to reverse, this is the time that it should do it. We'll find out. This is the Russell 2000, which is mid and small caps. It started to rally a little bit, but then rolled over, and it's still sitting down here at the lows. Hasn't broken through this bottom support level, but could very well happen next week. We'll see. So overall, the market's not looking too great. That's the bottom line. If we look at on the charts page, we will look at the Santa rally. Santa is still staying away. So right here is the first day of the rally. First 2 days look pretty good. Third day, it broke through the low, or the open, I should say. And then yesterday and today, it continued to go lower. So we only have 2 more days left. So that's Thursday and Friday are the only 2 days left, and it needs to get back above this to be positive for the Santa rally. That's a long way to go, actually. It's at 58.80, and it would need to get to, it's about 100 points, 59.90, 110 points, which is a lot for the S&P, but it could certainly do it in 2 days. But it's looking to me like it probably won't happen. We'll see. If we look at last year's Santa rally, it also did not, it also was negative. So right over here, you can barely see it right there, but it ended up negative -1% to start off the January barometer. So it's not unheard of, and this a lot of times happens because it's the end of the year. So not much of a rally for Santa, but we'll see what happens in the next phase, which is the first 5 trading days of January. All right, and if we look at down here, we look at the VIX chart. VIX is back above 17. Not much though, 1735. But still, we'd like to see it below. But it's in this gray area, right in between 17 and 20. So it really could go either way at this point. So this is Tuesday. So we're doing a technical Tuesday today, and it is going to be on the average directional index, the ADX line. So we'll take a look at that in 1 second. First, I want to show you the index chart since we have now finished the month. These index charts are monthly charts. We have now finished the month, and this is what we had been watching. So if you'll remember, John Carter showed this at the Money Show, and he showed that in 2021, in November and December, which were both up. So the market made new highs by the end of December, new all-time highs by the end of December, but momentum was starting to decline in November and December. So he likes to see 2 of those in a row, and we now have 1. Since the month is over, this is official. It is now a dark blue bar. So we have 1 of those. If we get another one in January, then it's indicating we definitely will be going down, maybe through the year. So we'll have to be very careful. Beginning of January, first couple of weeks normally is up with a lot of 401k money coming in, but we'll see if that occurs again this year. And then here's the S&P down here. Notice the momentum indicators, NASDAQ 100 and the Dow. All of these are right near the top of their Keltner channels. So they are at extremes, the place where it typically will revert to the mean, which is down here at the 21-month. So this is a monthly chart. So that's a 21-month moving average. And here's Bitcoin also actually getting into the 4X area. You can see it ended today with a, well, this is a monthly chart, so this is the end of the month. So it ended today with a shooting star for the month, which is not a good thing. Let's go over here and look at Bitcoin. Um, on a long-term 1-year chart, looks like that, still rolling over. So the 21 now is crossing the 50. And if we look at this on a monthly chart, and we go back 10 years. So there's the monthly, and there is the candle that I was talking about. Let's go back 5 years. You'll see it even better. There is the shooting star candle. That is pretty reliable reversal. So it probably, and these are monthly, remember, so each of these bars represents a month. So that reversal right there could come back down here to around 70, 75, which is exactly where the head and shoulders target is, right in this area right there. And the 21 moving average will be moving up to meet it. So can't tell you how long that will take. Could be more than a month. So that's the way it's looking right now so far. All right, let's jump over to the ADX for today is Tuesday, so we're going to do Technical Tuesday, talk about the average directional index. This is stock charts, so you can go to chart school on stock charts and learn about any technical indicator. You don't need a subscription to stock charts to do this, so you can learn about anything you want. So there are 3 components to the ADX. One is the average directional index, which is what it's named for. And then there are 2 directional indicators. There's a minus and a plus. So essentially the ADX line gives you the trend, whether or not it's trending, but it doesn't tell you whether it's trending up or down. That's what the minus and the plus DIs do. So there's 3 components to this. The plus indicator, minus indicator derive from smooth averages of the differences, measure the trend direction over time. So the ADX itself only measures whether or not there is a trend. So the ADX is derived from smooth averages between the plus and the minus, and it measures the strength of the trend. So you really have to understand this. It's kind of a little bit counterintuitive, and I'll show you on the chart what I mean. But the ADX line just tells you the strength, but it does not tell you the direction. So if it's moving up, that means it's a strong trend, but it doesn't tell you if it's a positive or a negative trend. So it could be crashing, and that would send the strength of the ADX line up. But the plus D and the minus D are the ones that tell you the direction. So I'll skip through this on how to calculate it, and we'll go down here and talk about trend strength. So this is a good example of what I mean. The suggestion is if the ADX, so that's the black line down here. So here's the ADX indicator. So the black line is the ADX telling you trend strength. And the idea here is if it's above 25, then the trend is strong. If it's below 25, then there is no trend. So usually, many times, analysts will use 20. I like to use 25 to identify whether or not there is a trend. So if the ADX is below 25, there is no trend. That means it's typically moving sideways, which implies a squeeze. If you remember from my Technical Tuesday on the squeeze, you can look back a couple of weeks to see that. But that essentially would be the same area where a squeeze should happen when the ADX line, the dark line, black one, is below 25, or 20 in this case. So if this is moving up like it is here, then it's a strong trend. It's above 20, but you don't know if the trend is up or down. Well, clearly it's up here, but you can tell because the green line crossed the red line. That's the plus, the DI plus and the DI minus. So when the green line crosses above the red line, then the trend direction is up. And when the black line crosses above 25, for me, 20 in this case, then the trend is strong. So you can see right here in between these two vertical lines, it was below 20. So there is no trend. It's non-trending. It's basically moving sideways. Now, yes, you could say, well, it looks like the trend started there. That's true, but you don't really know for sure until this gets above 20. But you can tell right here where the green crosses the red is right about where this began. It's just confirming that the uptrend is in place over here. So you can use all three of these things to really determine direction and strength. So here you can see that the trend is down clearly, and the ADX line is still above 20. So that's saying that it is still a strong trend, but in this case now the red line is above the green. So now it's telling you that the trend is not only strong, but it's also down. And then we go into a period where it goes below 20 again, right through here, and we have no trend once again until the green goes above the red, and now we have a positive trend. So that's how it works. That's the way to use it. This is something that John Carter talked about in his book that I used when I duplicated his squeeze, which I'll show you here in a minute. You can also use crossovers where I was just showing you that, where the green crosses the red. So in this case, the trend is weak down here. So right up here, just moving sideways, but the red's above the green, and then the green went above the red. So a lot of times when it's below 20, that's what happens. These two things oscillate back and forth. So it's hard to really tell which direction it's going to go until the strength breaks out. So until you get any of these above 20 or 25 in my case, then you know which direction the trend is going in. And then down here, this is a good example where we clearly have a down signal right here when the red crossed the green and the ADX was above 20. So it's a strong downtrend. So that's the sell signal. So you'd stay out until the green crossed back above the red. Now, the ADX is still above 20, so that means it's still strong, but now the direction is up. So that's your entry right there. But then you'll notice that it went down below 20 again, and these two things oscillated back and forth. So you basically can just ignore that when it's down in this area down here. Just ignore that until you get a stronger trend and it's red. So that's the way to use it, and I'm going to show you some examples of this. Let me first show you with John Carter's squeeze, and this is one of the buttons that I use on my stock charts, and those buttons are available for subscribers. If you go to the chart lists and scans page, all of my favorite buttons are right here. You can just click on any one of these and it will show you a chart using Netflix as the example. And you can then copy that into your own stock charts platform and have the same buttons that I have. Or you can create your own if you want to. But for me, this number 10 one right here is the John Carter squeeze. This shows you the squeeze. There's a squeeze right here. And notice that the ADX line, this is for Tesla, the ADX line down here is below 20, below the 20, actually 25 line is this gray line up here. So it's below 25. That means it is not a strong, it's sideways, and you can see there's a squeeze right there. So that's the way to interpret this. I added a MACD down below just to help me. This kind of simulates John Carter's indicator. Not exactly, I'll show you the actual indicator in a minute. But it shows you also that the momentum is declining as the green line went down and then the red line crossed above the green. So now it's a negative trend, but it's still not a strong trend because it's still below the 25 area. And then the green went above the red right here where this bar broke out. And now we've got, it turned into a strong trend right here. But the uptrend actually started back here. So it pulled back. This was still below 25. And then it started to take off, and this went above 25. So now we know the trend is strong because it's moving up, and we know the trend is up because the green line's above the red. Now they're starting to converge again. So you can see already, and we have another squeeze right here on Tesla. And already the price is starting to come down. The trend is dissipating. This is the uptrend. Now this is rolled over, which means the uptrend is now losing strength. And if this red line crosses the green line, especially if it does it right here at the 25 level, then this will be a confirmed downtrend. And it's already below the 21-day moving average. So it may already be confirming that it's headed down. Another one we can look at is AMD. And AMD has definitely been in a downtrend. So in this case, you can see here where the black line went above 25 right there. It actually was below 25 through this whole period, implying that it is not a strong trend. However, the red line's above the green. So it's still telling you that it's a downtrend. So here's where the uptrend ended right here, basically right there. And then the downtrend kicked in. And as it went sideways through this period, we actually had a squeeze right here. So that's what AMD looked like. Now let's look at this on the ACP chart. In this case, and by the way, this is also on the website. I put some of my ACP charts right down here. So the 5-panel one is the one we're looking at, but the other ones are here as well. For anyone that uses stock charts, they can just click on that and have these same charts that I'm showing you. So in this case, this is Tesla. You can see down here, this is a weekly chart. And the weekly chart actually shows you right down here that the ADX line was below 25. So this is a weak trend. And you can see up here with the weekly chart, it hasn't really started to move up yet. But then it broke out right here, right there. It's right on this candle right there, it broke out. And you can actually follow these. So this one on the left is a monthly. So if we just move this cursor right to that candle right there. So this is where the green one went above the red back here. So it shows you that the tendency is to go up. And then the weekly broke above right there. And you can see on these other charts, on the right-hand side is the monthly. You can see where the monthly chart started moving up, and the green actually down below just began to move above 25 right in that month. So that was in November. So November is where these started to break out and get confirmed. And you can see in the upper left, which is the daily chart, that's where the entry point would have been right there when it pulled back to the 21-day moving average. So if we actually look at this, the entry point would have been right here. If we had been looking at the weekly and the monthly, both of them indicating with the ADX line that a new uptrend was beginning. So that's where you could have got in on that trend. Of course, it started back here, but wasn't really confirmed till over here. And then you'll notice the green line. Now the ADX line is now above 25 right there. And it's staying above 25. And as you can see, it's just starting to converge again. So one more down day, and this will likely start to cross back over. Now, how can you see some of these things ahead of time? You can use all of these things together. So on the top is the MACD. You can see it just moved below zero. The histogram moved below zero right there, and it crossed over right at that same point. Now, the green line is still above the red, but it's moving towards the 25 level. And the momentum right here, momentum bars are turning dark blue, which means momentum is declining. We had one more up day right here, and then again, momentum started to decline. So anywhere in this period right here, you've got a bunch of things that are confirming that a downtrend is about to take place. And that's might be actually continuing to go down. It doesn't look too good for Tesla yet. We'll see. We can expand the weekly down here. And on the weekly, remember it was in November right here. This is where it first started going up. So momentum started going higher. The MACD actually crossed over the zero line way back here, back in June. So this is a weekly chart, so it takes much longer. And you can see on the weekly, it's still okay, but it looks like it's starting to roll over. But these aren't really concerning yet on the longer term chart. So the daily could cross over, it might go down and then bounce right back up again. That will solve this problem. And on the monthly chart, which is much longer, and sometimes you can actually use the monthly chart if you just want to be a long-term investor and just stay in things for a very long time. You could have watched Tesla over here stay below 25 for 2018 all the way to 2020. So 2 years, you would be watching Tesla basically go sideways. And then the green went above the red right here. So that's your first signal. The MACD crossed right there, and then it went above zero right there. So there's your second signal. So somewhere in this area right here, and you can see the squeeze that was on a monthly squeeze for this whole period. So this is a good example of the ADX line being below 25, just is a stock that's just moving sideways. And that's what the squeeze does too. So it's been in a squeeze all the way up until right here. And then the squeeze fired. So this actually, the green line actually went above the red back here. And then one more month of a squeeze, and then it fires right here. And then it went above the ADX line, went above the 25 right there to confirm it. And you're in it, and you would have stayed in it all the way until somewhere in this area, or you could have watched these as well and got out a little bit earlier. But the warning signs were in through this area here. When momentum started to decline there, this was already moving down, and the green line was moving down, and the momentum was declining. So that's the way to use the ADX line. You can use it on a monthly, weekly, or a daily chart just for fun. Let's look at the Keltner channel. We'll look at the November timeframe again. So right here would have been the entry from all of the ADX lines that I showed you before, right when it came down to the 21. And then it bounced back up and went up, got very extreme, pulled back a little bit, but it's really stayed up in this area all the way up to here when it was in the 4X area. And then it declined and reverted to the mean. That's where it is now. It's reverting to the mean. So looking at this, it potentially could get back down to 350 before it reverses. We'll see. Or it could reverse right there. We'll see what happens next week. So that's Tesla. Let's look at AMD real quick because we looked at that on the other one as well. Using the same charts, you can see down here, had a very brief squeeze. The ADX line was below 25 through this whole period. So this is from May of 23, May of 23. And it hasn't even crossed yet, but it looks like it might be getting ready to. However, the red is above the green. So if this is a strengthening trend, it is a strengthening downtrend. So we have to be careful of that. There was a squeeze back in here, and this was below 20. Almost all of these were below 25, but you can see the red was still above the green. So still indicating a downtrend all the way back here. So this is where, again, if you look at all of these in combination, this here is where the high was and where it started its decline. If we look at this one here, the MACD is coming down, and right here it crossed and went below, the histogram went below zero. The weekly momentum starting to decline right there. So the second one was giving you fair warning. And the ADX really didn't give you warning until down here when the red line started to cross. So again, that's just a way to use all of these things combined. If you look at the monthly chart, this was the high back here. Momentum was still going up, but the ADX line was coming down and green was coming down, and now it's getting ready to cross right there. So on a long-term basis, this is indicating that it still has more downside left in it. So we have to really be careful with AMD right now, because what you really want to see is something like this, where it's been going down. This is all the way through 2022. And then the momentum starts to pick up right through here and through here, right there. And the green line went above the red. So that's what you're looking for, something like that. If we get a year in 25 that's similar to 22, which is this period here, then it may be a painful year all the way until the end, October, November timeframe. And then you want to look for these types of things. There'll be lots of stocks probably that look this way, actually, if that happens. If we look at the daily chart on AMD, you can see how the momentum on the squeeze indicator has just been below zero the whole time. So this is nothing but a downtrend. You can see where the MACD went below zero right up here. This was in October and has just stayed below zero, still not above it. So it's still not confirming any kind of uptrend. And the ADX line down here peaked up a little bit above 25 right through there, but for the most part, it's staying below. And then finally went above 25 right there, but the red is above the green, and it has been since all the way back here. So this, again, is just confirming that the downtrend is actually strengthening on AMD. So it's not time yet to try to get into this. It could still have more downside left. It could bounce at support right down here at 117, 118. But it looks to me like it may actually start to accelerate, especially if the rest of the market doesn't cooperate and starts to go down. So that's it for today. Hopefully you understand the ADX line a little bit. I like putting these on my charts. I actually put them on these charts right here because I like using it along with the squeeze. John Carter actually created and talked about both of these, the squeeze and the ADX line, in his book. So this was something that he used because the squeeze, the red dots down here will tell you that that it's going sideways and that momentum and energy is building up, but it won't tell you which direction it's going to go. You can kind of see that in the momentum bars on the histogram, but you can definitely see it also if you're watching the ADX. So using all of these combined together is the best way to do it. All right, hopefully that was educational for you. Hope you understood it. Please like and subscribe to the channel so I can keep this going if you find it useful. And let me know if you have any questions, if there are any other indicators you want me to focus in on in future Technical Tuesdays. There's a few that I have in mind anyway, but if there's any you'd like me to talk about, be happy to do that. And have a great New Year's. Everyone be safe. Markets close tomorrow, so can't lose any money. And then we'll see what happens in the new year. Happy New Year, everyone, and I will talk to you soon.